viewers, thank you for and welcome to the Village Bar Academy once again. In our last video, we spoke about those things you have to consider before you set up a business, and we look at three kind of businesses. We talk about proprietorship, we talk about partnership, and limited liability incorporated businesses. And we did promise that we will take turn to discuss this each kind of business and the advantages and disadvantages of setting up either of those businesses. Today we want to talk about sole proprietorship. Also, it is called sole ownership. Some call it sole traders. All of them are the same. The terminology. What it means actually is that this is a business that is run by a single owner. A business owned and run by a single owner. One of the major features of sole proprietorship is like the owner is also double as the manager. The person owns the business and also manages the business. So that is why it is a sole proprietorship. So it's called a sole proprietor or sole owner or sole trader. Also, I must include that being a sole owner does not preclude you from having employees or having employees to run the business with you. You can actually employ people to run the business with you as well. But the major fact remains that the business owned and managed by a single individual. Of course, what are the advantages of running the sole proprietorship? Of being a sole proprietor in a business? It is usually very affordable, very simple to set up. It's from the simplest of trading, from simplest of business. You can just set up a business right at the corner, a kiosk, or a vendor, or a reseller of any product. So you just start your business and you move on. It's usually very simple, usually very affordable to set up. People can also set up, a sole trading business with a very minimal amount, depending on the currency you are looking at. So it's very affordable, usually very simple. And another thing that advantage of sole proprietorship is that you have the freedom, you have the flexibility. You can choose when to open your shop. You can choose when to close. You can choose when to do business and when not to do business. Even these days that people do business online or on phone, you can just say, "I'm not working today," or "I'm not opening my shop today. I'm not opening my store today," and nobody will flog you or bother you about that. So there's a lot of freedom, there's a lot of flexibility in setting up a sole proprietorship or a sole trading business. And there is less paperwork. You don't do much of paperwork because there's less regulatory requirement for you for documentation. Also, consistent with my advocacy on this channel, I also still ask that you keep proper record of, the minimal record of your income, your expenditure, your sales, and all those things. It's usually very good and profitable to keep adequate record. It helps you to plan better. It helps you to also be able to evaluate how you are doing. But in sole trading, the paperwork is not that as cumbersome as another kind of business. And of course, you can, your income is very simpler income, because you are in charge of visually everything. Though the danger here is that there is the tendency not to be able to distinguish between the business, the coming from the business, and the income that is coming to you directly. So those people so trader most of the time, they mix up money from the business and personal money. Even some don't even have separate bank account for the business. they use their personal account to do the business. So you cannot separate expenses that are incurred for the running of the business and personal expenses. And like if you have listened to most of my previous videos, I always advise, even when you are running a sole trading business, give yourself a salary, give yourself some wages, so that you can be able to evaluate how the business is doing. So it is an advantage. It can also become a disadvantage if care is not taken. And of course, in some jurisdiction where tax filing is a very important thing, it is less cumbersome for sole traders to file their tax. They have simple income tax. Just it's simple of income and expenditure. What was your income? What was expenditure, and everything. So, anyway, in banking, in terms of banking activity, you have straightforward banking. There is no complication. Just some, like I said earlier, some actually open the same bank for them and the business. So there is no separate. They just open one bank account which they use for both personal and for business. Though it is advisable that you can still open a separate bank account for your business. And of course, of them, the business behind their name, so and co, so and stuff like that. So everything about sole trading is simplicity. Everything is straightforward. There is no much complication. And of course, you have simplified ownership. There is no complication. It's owned by an individual. He knows what he why he owns it or what he wants to do. And what the kind of it always like decision making is very, very fast. It's not cumbersome, no complication. You don't have to set up a panel, a committee. You can take decisions. You can think on your feet and do what you have to do. So that's one of the advantages of setting up a sole trading business. You take your decision by yourself. You can take your decision while you are sleeping on your bed. You can take your decision where you are having your bath, or anywhere you are. Driving, wherever you are, you can take a decision. Or like where you have to, people have to meet and you have to argue over things here and there. Of course, this also could also be a disadvantage sometimes, because you may not be taking optimal decisions most of the time, because they say two good heads are usually better than one. But decision is fast. Decision making is very fast. Decision making is not complicated at all. With sole trading or sole proprietorship. What are the disadvantages? One of the major disadvantages of sole trading is like there is no liability protection. Nothing protects you against any liability. So, whatever, if you are unable to pay your creditor, for instance, they have access. They can seize your property. Anything that belongs to you belongs to the business, literally speaking. So you are not protected against any liability. And also, this also can limit your scope, of operation, because many businesses, organizations may not want to deal with you to a very large extent, because they know you are not protected against any liability when you, default in any obligations to them. It's the same thing. It's the second disadvantage. Like, it's always very difficult to secure finance or credit, because businesses don't want to give credit to a single owner, because they know that most of the time they may not get their money back. And of course, as a sole trader, when you are owing people and you are declared bankrupt, that is the end of the money. The money is gone. So, because of that level of number one and two are actually kind of related. Because of that, no protection against liability, it makes it tougher and harder to secure financing and to secure, credit. Most of the way out of credit is like when you become a regular customer to a particular person. and you meet obligation as and when due, it may become a bit relaxed for you that okay, they can extend some credit. But usually credit is also not for a longer period. For instance, if they are giving the company, an incorporated company, maybe a credit for like 45 days, to you as an individual, as a sole proprietor, they may say, okay, you can't give more than a week or maximum 2 weeks. So that is that limitation there. Usually when you want to reset the business, it's always very difficult because people say this business is run by this person, so is the alpha or the omega, permit me to use that word, of the business. So, and how does a third party carry out a due diligence of the business, that all the information about the business reside with the owner? So it becomes difficult to sell, and like unlike the other kind of business that is easier to sell. And again, you have unlimited liability. Every liability you incur has to be paid by you. So everything, including your personal asset, everything are all encumbered to third party. So you can't when it comes to that liability, you cannot draw the line. So whatever you have, everything you possess, when the business is owing people, they can retrieve anything that belongs to you, as recourse to whatever you are owing them. Even from the beginning, depending on the kind of business you are doing, if it is a simple one, which you can raise the capital by yourself, that is okay. That is not a challenge. But when you want to raise capital, what you want to do is beyond what you have. It becomes very difficult to raise capital. It is even more difficult even to raise capital for expansion. Maybe you suddenly discover that you are making good sales and your customer is expanding, and you need to inject fresh capital to the business. It's always very tough for a sole trader, a sole proprietorship, to raise such a capital. For instance, when you approach the bank, because you have not separated your banking activity from business activity, from the personal activity. When you are able to present your bank statement, say, oh, this is a personal account. So how do we know which transaction belongs to the business and which one belongs to you as an individual? And because you are also not keeping a very sophisticated record, so it becomes difficult, to raise capital for even to initial takeoff if the business is expansive, or for expansion if the business grow over a period of time. Also, because of the individual firm, because of lack of separation between business expense and personal expense, it shows that there is usually a lack of financial control. You don't have there is no strict guidelines. Okay, what you can spend and what you cannot spend. Most of the time, sole proprietors they spend as we will say as the spirit leads. So it's a more of, you can do a lot of impulsive spending. You can do a lot of impulsive purchasing. As a business owner, sole proprietor, you see a lot of money in your bank account. You can decide to buy what you don't need. So financial control is very difficult. It's actually completely lacking. There's no check, there's no balances. You spend what you want to spend, you incur debts you want to incur. There is nobody that can say, don't do it. Oh, no, it is not, the business does not permit it. This is not, there's nothing to tell you that this is not a business expense. You want to, the money is in your bank, you spend it. So there is usually that lack of financial control in sole proprietorship. Sometimes, despite the advantages or disadvantages that you may find in this business, situation may also play a greater role in the kind of business you want to set up. For instance, if you have limited cash with you and you are not able to raise funds from anywhere, there are times you may not have any choice than to set up a business as a sole proprietor. It doesn't matter that you have other people working with you. Being a sole owner or being a sole trader does not mean you have to run the business all by yourself. It allows you to employ people. Of course, the more you employ people, some of the disadvantages may be a bit, you may overcome them. Because if you are, like say, you a business that has about 5 employees, must be able to set up a kind of financial guidelines. You must be able to maintain some level of financial control. So, the more as the business grows, some of the disadvantages may fade away a bit. But by and large, most those disadvantages I've mentioned and some other more are peculiar, to sole trading, to sole proprietorship. It's not a bad thing. There are some big businesses that we hear today that started as a sole trader. So if you know that your capacity in terms of especially financial capacity cannot cannot enable you to establish other kind of businesses, there's nothing wrong in starting off as a sole trader, and from there you can transform to other kind of businesses. So in the subsequent edition, we are going to look at partnership. Then we are going to look at limited liability or incorporated companies, and maybe we look at the advantage they have over sole trader, and do some disadvantages. They also, for all form of business, have their own advantages and disadvantages. Sole trading is good. It's usually a good starting for somebody who wants to delve into business, especially those who may not have a good business experience. Though I warned in the last video that I do not always encourage people to go and do business they don't have any experience about at all. But sometimes people do that. They just take the plunge and they succeed, with perseverance and other things. So until I come again next time, where we'll be discussing partnership, remember, keeping records, even as a sole trader, is not out of fashion. Good records help you to evaluate your business very well. Thank you. Don't forget to subscribe if you have not. Share with friends. Put on the notification button so that as new video drops, you can be notified. Have a good day.